Good morning all and welcome to Pimpalicious Play of the Day on Wednesday the 26th of November. Well, another cracking day yesterday for you slightly longer term traders. Um, Jumping into cable around this area and then again on the break of this area. So well done to everybody that took that. A little bit unfortunate if anyone did get stopped out. I think we were talking about a shorter term. If you're in for the shorter term, a stop at 150.20 or 150.40. Well, this went down just to the 150, so it might have taken a few of you out. And in hindsight, I feel actually a bit sorry about that because even a shorter term trader should have a stop loss behind this 4-hour 20, just as a safety precaution. I mean, yesterday, for example, I should have been a bit more on the ball. Wall Street was heavily overbought. Euro dollar was heavily overbought. Their most likely immediate direction would have been a small retracement. And what with Merv the Perv, Mr. King coming on yesterday and saying his few bits and pieces, it was always on the cards that it would pull back a little bit aggressively. Okay, there's nothing to write home about for the longer term guys who had their stops between the 149 and 150, because we're now up at the one, we've been up as high as 155. So fantastic effort. I've just closed a part of the position here and just sold a little bit of here just a cheek on the cheeky pullback. But anyone that's took that, well done, well done. Just wanted to show you a little trick while I'm here. Here on this, can you see this? Let me zoom that in a little bit, and then we'll get cracking with today's action. We're just really waiting for this 60-minute 20 moving average to catch up yesterday. Okay, I think it was here. But can you see on this we have a little trend line coming across here, a little resistance line. When that punctures, that's when it gets the power. Yeah. Now without any of these actually changing to red, we've also got a little retracement on there as well. So a really quite a handy little tool and well worth paying attention to. If any of you guys, excuse me, if any of you guys want to get the template that I use for this, then please drop me a line on the email. It's thefxpimp@hotmail.com, and I'll gladly send it to you and you can have a little play with it. But without further ado, today's action in a rather overbought or oversold market. Yen pairs are doing nothing for me. They're very, very messy. Pound dollar, euro dollar, good. Are they going to continue immediate term? I don't think so. They're going to continue. But here's one. It's a bit of a slow coach. I don't trade it very often. But just zoomed back here, you can see this massive, massive, massive support line we've had. Yeah. We've also got a kind of a double top here and here. So it's actually a lower high. But the interesting thing about this pair, it's sterling, euro sterling, EURGBP. Okay, it's not the most fantastic pair to trade, but look, my 4-hour CCI has crossed, my hourly CCI has crossed, my trigger's just coming in. Let's have a little look at the evidence. Get in there a little bit closer. Come on, come on. Oops. Oh, I'm having a mare this morning. We've got a little bit of red coming in, haven't we? Yeah, it's starting to go. I mean, it's not perfect yet. Not ideal just yet. Although you can start building, you know. I mean, this pair doesn't move immensely. And for a longer term trader, your stop would have to be 85.22, only 75 points away. For a shorter term trader, let's say 85 to play it safe, only 50-point risk. 50-point risk, it's not a lot if you now start building the position. Okay, we did have quite a substantial drawdown on this sterling yesterday. I think it was 151 we got in, went down to 150. So there's a 100-point drawdown there. But as suggested, if you only start, there's no guarantee this is going to break this resistance. If you only start building a position with a quarter stake or half stake, well, let's say half a stake for argument's sake, then this 100-point drawdown is only actually 50-point drawdown. Yeah, at full stake. So it's not the end of the world. If you're on a quarter stake prior to this being broken, then it's only a 25-point drawdown. Yeah, so it's very, very, it's well worth studying sort of building in and out of positions. And back to the trade of the day, the play of the day. Yeah, I mean, look, our this is all a little bit messy in here, isn't it? Let me just zoom that in so we can have a closer look. Right, my 60-minute 20 has crossed my 60-minute 50. My 4-hour 20 is trying to cross my 4-hour 50. The price is beneath my weekly pivot. It's beneath my daily pivot. It's beneath this big support line coming up from before. It's got to give a little account of itself, I would say, and I'm happy to start building a little bit of a position. It's perhaps wishful thinking on my part that this is going to fall because I get paid in pounds, but I live in Spain, so I spend euros. So I'm hoping this is going to come down, and it's going to reflect a slightly advantageous exchange rate for me. So that is the play of the day today. Euro sterling. Start building around about here. Stop loss for the longer term guys up at 85.45, so 95 points away. Shorter term traders behind this 60-minute 50. So really, I mean, look at the figure, 84.90 or 85. Even be cheeky, just park it behind here just for safety measure. First target would have to be somewhere down here. In fact, I'm not sure that trend line's all that. Let's get rid of that. It did support yesterday. Resistance, resistance, resistance. Support there, support there. Let's keep that on there for a minute. Okay, so there's your first target. Second target is your daily support one. So we're looking at 83.86, 83.75, 83.45, and 82.89. Yeah, so it's not a huge mover, but anyone's still holding the CAD trade, they're 500 points up now. Anyone's still holding the cable trade from yesterday, probably 300 points up now. There's plenty of pips. You don't need to make 1,000 a day. It really doesn't matter. Take it easy. Enjoy yourself. I'll see you all tomorrow. Bye for now.